Hello and welcome to Business Today Television. I am Siddharth Zarabi, and joining me right now is the CFO of the Adani Group, Mr. Jugshinder Robbie Singh. Robbie, thank you for joining in. We are speaking at a time after days of a shocking sell-off, nearly a $50 billion sell-off across your group stocks, and you are on the midst really of your follow-on offer of 20,000 crore. I want to begin by asking you, how do things stack up at this moment? Are you confident that the FPO will sail through?
Yes, we clarified. There were some rumors, so we clarified on Saturday night that FPO will proceed as planned, no changes as announced, and therefore we are confident, naturally, that the FPO will go through.
Mr. Singh, and you are a finance person and you will be able to explain this to our audience. A lot of people are asking this question that the current price is lower, significantly lower, and I'm not even asking you about the valuation justification. With the price being lower, how do you think the retail segment is going to perform? Because last update was that it hasn't done too well, although your corporate book, the anchor book, has done pretty well.
I think in an environment like this, it has to be understood. That's why when we want to select how we want to go about certain capital program, you select the mechanism very carefully. So we selected FPO as a mechanism to go about this, and the reason is that FPO gives you the flexibility to fill your book and complete your FPO based on total subscription to the FPO. In our case, that will now happen majorly via the institutional and long-term strategic book. So now your question in relation to why would that happen in relation to the price differential, that goes to actually a big question at the heart of what AEL is. See, AEL is not a normal corporate that trades on earnings multiple and PE multiple. It is an incubator. Its value comes from what it is incubating. So if you now look at this, then what AEL is incubating is following assets: airports, roads, green hydrogen, data center, Adani Wilmar, Adani Digital Labs, our mining services business. Those businesses are still the same because they are core businesses to the sector and the core growth of India. And they are more of it is just the core infrastructure, which is consumer non-discretionary spend. So those businesses are the ones that have value. Adani Enterprise is simply a way to access that value. So what people are interested in is number of shares they can get in Adani Enterprise. Now the value will occur when we demerge that business, and they will end up owning the similar number of shares based on the ratio when those businesses demerge. And you will see that even this whole report, bogus report based on lies and misrepresentations, but the even a misrepresenting report, even they could not find anything to misrepresent even in our businesses. So even that report doesn't talk about our fundamental businesses, because nobody can talk about it, because we build Hajj. When you go to Mumbai airport is our airport. So if you be a shareholder of Adani Enterprise, you automatically will get, once our airport platform list, you will own shares in that. And that's why it's not the share price has sensitivity. For retail, it has massive sensitivity. But for long-term institutional, long-term strategic investor, long family offices, that is, yes, a volatility issue, but longer term, it doesn't change the value equation at all.
Did I understand you right, just as you were answering this, that now the institutional investors will partake of your offer, and you are now expecting retail participation to be lower? The 6,000 crore amount where you had received subscriptions of 9,000 crore. Explain this to me, because I think you have just said that it's changing in terms of who is going to put in the money.
No, it's basically what happens is that under normal circumstances, you would say that, okay, there will be X amount of retail participation. For example, we know, because we get that report, 40 lakh applications went out. So you can judge how much would be the retail participation in normal circumstances. So now what will happen is that we also know how much was the demand from institutional investors when we did the roadshow, etc. So now what will happen is that in FPO, you have the flexibility that the FPO can be filled from any one category.
So all of the 20,000 is now coming from the institutional category.
At this stage, now once because now we have issued our report, people will read the report and hopefully media will pick up that this report is bogus, misrepresented, and they will now start asking questions: why did we even push this report, which was full of misrepresentation and lies? Now, when that happens, then you can we don't know what the final retail and final HNA participation will be, but if you ask me today in terms of where we are, then based on the weekend's information, then yes, significant participation will be from long institutions and long strategic investors.
Okay, and why has therefore the retail segment stayed away? You said that 4 million applications have been purchased, and the last number that I know is that only 1% was subscribed. So have retail investors lost confidence in AEL and the group after the Hindenburg report?
No, it's just a technical retail investor. Normally, if you are, say, argument's sake, if we look at logically, then if let's say a retail investor gets, bids for 2 lakh rupees. So under, say, normal circumstances with 3,000, though, then you will end up having certain number of shares, 100, say, or less than that. Now, 100 shares you can get in the market also. So it's not lack of confidence, just the lack of logical situation that prevails.
Okay, and
okay, the retail investors, once now our response has gone out and become public.
Yes.
Now, if once serious journalists and journalists will pick this up, they will then asking questions on what basis this report full of misrepresentations and half truths and lies. How was this allowed to make this impact in India?
Okay, I will come to that, and I will come to that. But just one quick final point on the FPO.
Please.
And the issue closes on Tuesday, or is it being extended? What you have told us, and I'm just reiterating for everyone's understanding, issue price has not changed. The investor mix is changing. You expect a significant majority to be institutions. You don't know how many retail or HNIs will come in. But is the issue closing Tuesday, or is that being changed?
No, at this, like I mentioned very clearly, the announced FPO status remains exactly the same: price, closing date, etc.
Okay, I'm glad you said this. Now let's come to the other point. You term the Hindenburg report as a bogus report, and I have in front of me the clarification that you had put out. But Robbie, you will agree that 88 questions have been raised, but not all have been answered. Why is that? Given the, as you call it, outlandish nature of the allegations, you call it bogus, wild, those are your words, then why not answer all of these 88?
We have answered all 88 questions. You should look at the full report that has been released. What you have is our investor briefing, which was done on Saturday.
Yeah.
We issued full report on Sunday, which you should look at. It goes through each and every question.
Okay.
And all 88 have been answered. And I can tell you this, even if we did not answer the question, you go to one of their questions of 88. You pick up a question on the issue of where they say that we inflated the books of AEL because we transferred an asset to the private side, and that in the private side, immediately that asset had to be written down. That was our disclosure of a related party. First, they did not do any research. It is our disclosure only. Second, they misrepresent that because on the other side, AEL had already booked that loss in its P&L.
Okay.
Which they are not telling.
Okay.
So now this report, 68 of these so-called 88 questions are like this bogus misrepresentation and outright lies.
Okay.
Because only two options are left for them. Once you see our report, we have fully documented, by the way. Every single document is attached. And you can see this. Now, either they have not done any research, they've just cut, copy, paste, and did a hit job, which what we believe it is, a malicious hit job on the FPO. Or, which is even worse, they actually did the so-called research. They knew this because it's the same accounting note, and they're deliberately misleading the public.
Okay. Let me
So
pick.
this you will see this. I request you to go through, and I request you to now go and ask this question of them. Why this misrepresentation on 68 of the 88 questions?
Okay. What about the remaining 20?
The remaining 20 are 6 of the questions are, you say that you can you accept criticism. Why did you do X? Because you should accept all criticism. We accept criticism, but we cannot accept lies and misrepresentations and untruths and bogus things. So in 30 years, we filed 3 or 4 lawsuits, maybe 5, in 30 years of business. And so rest of the questions are like bogus questions like this. Then there are questions that relate to simply somebody's personal family office, which of course we can't answer. So as much information as we can get, we provided that, and that's the sum total of their report.
One of the questions that I want you to answer is that your audit firms, and in the report that I have in front of me, your detailed clarification says 8 of 9 listed companies has a big 6 auditor, and Adani Enterprises, Shah Dhandharia and Company, and includes 27 other statutory auditory firms like EY, PKF, Walker. There are questions about Shah Dhandharia, and without making any allegations about them, the questions in public domain are saying that this is too small an audit firm to audit an entity as large and expensive as yours. There are even questions that have been raised about the rent that they are paying for their office. What is the truth about Shah and Dhandharia, and why does your group not have all listed companies with the big 6 audit firms?
Very interesting question, Let's reflect on what you are saying for 30 seconds, if you indulge me. The person accusing Shah Dhandharia of being a small firm is themselves a 5 to 10 people company who sit out of a WeWork desk. Look at the irony. Okay, second part. Do you think that as a large Indian corporate, we have no responsibility to develop Indian vendors? We have no responsibility towards developing Indian institutional framework? So if we support the development of a small firm to become a proper, good accounting firm, how is that a bad thing? Is it not our responsibility?
But is it
we have
equally...
20, no, please let me complete.
Sure, please.
We have 21,000 small vendors, Adani Group alone. Some 4 people. We have a Clean for You business that is run by 4 women in Kerala, which our port uses. So you will now ask us, why using a 4 women run business in a port business, which is India's biggest port? This question smacks of disrespect, lack of understanding, and lack of long-term planning for our country.
Okay.
That's number 1. Number 2, it represents misunderstanding of Adani Enterprise. As I explained earlier to your earlier question, Adani Enterprise is an incubator. Its value lies in its businesses it has underneath it. So if you look at airports, auditor is big 6. Mining services, auditor is big 6. Those are the business we need audited by big firms, because that's where the value is. So now if somebody is aggregating it on top, that is where we can have flexibility to ensure that if we can support some development. Now, eventually, Adani Enterprise itself will also have a joint auditor, Big Four. Okay. Now, I'll give you another example of this. Airport Authority of India uses a panel of domestic auditors for the same purpose, because Airport Authority of India also wants to develop audit firms domestic. Now, in our airport business, not in air mile business, but the smaller airports, we use an auditor firm out of their panel. It is a requirement under the concession of the government of India. So you expect us to now go and breach the concession requirement? See, this is what has to be understood of the malicious nature of this.
You make this point, and it's our viewers are listening to you, and we ask questions in that capacity.
Please.
You have said that you are in the process of changing or evaluating the option of getting a global Big Six audit firm for Adani Total Gas. Shah Dhandaria is the current auditor there itself. By when will this happen, and why are you changing? Is it part of a mandatory rotation or some other reason?
No, both reasons. One is that you have to see the Adani Total Gas. Adani Total Gas, Total is the joint promoter with us. Total is a global firm. They sit on the board also with us. They have seen how Shah Dhandaria works. Do you think if they had an issue, they will not say anything?
Okay.
That's number one. That shows you the quality of Shah Dhandaria, that it is acceptable even to a large global major. Now, our own requirement, our own development, our own growth means that we are going to go for global issues of debt out of Adani Total Gas. When we do that, we want certain comfort letters, opinions, which better that global six is there, because that comfort letters, those opinions are of certain requirement. They might have to require sign off in the US, they might require sign off in Europe. So that's where global six will have presence.
Okay.
So we'll have joint audit. Now, when Adani Enterprise tomorrow itself starts issuing paper globally, we'll look at that also. See, this is decided by business requirement. Adani Enterprise already has global law firm, accounting firms as its auditor for the businesses, because Adani Airports issues a global paper already. So therefore, it has Grant Thornton as the auditor.
Okay.
So it is driven by business needs. It is driven by your compliance requirements. It is driven by what is that you are trying to achieve.
Okay.
So if you issue paper in Europe or in America, then some sign off might be required in that domestic jurisdiction.
Okay. Fair point.
Okay. So that's what it is. Now, if we are India alone, we are comfortable. Even Total was comfortable and is comfortable with the work done by Shah Dhandaria. Okay, we should not impugn people because they're a small firm, they pay rent, because they are sitting in an office where before we had full leasing. Now our office is Adani Corporate House. But we have continued the lease on that office because we have our back office, there are certain other offices there.
Okay.
So they continue to use that office.
Okay.
So what's the big deal?
Okay, let's move on from there, because I know you would be pressed for time, and I have a very long list of questions which I want to at least take whatever we can very quickly.
Please.
Adani Group stocks, 8 of them have a nearly 5.75% weight on the MSCI Indian Standard Index, and MSCI has said that it is seeking comments and feedback on the eligibility of your securities to be part of that index. Why is this? Does this hint towards a likelihood of MSCI dropping Adani stocks from the index?
That is for questions more relevant to MSCI, because they haven't yet formally reached out to us. They normally in a high volatile situation, they will normally ask the question, and if we will reach out to them and give them the same report we issued on Sunday, is going to them also.
But Robbie, you spent your working life in professional finance, in high finance, and you are the CFO of as large as a group as Adani. I haven't seen such statements, frankly, coming from MSCI in previous instances. Does this kind of tell you, and would it be, how would you respond to my question that there seem to be issues and doubts around governance and your certain practices which are reflecting in statements like this by MSCI?
See, like you rightly said, as a finance professional from business background, I don't like to speculate. See, all I can tell you is this. On a governance rating, argument's sake, if you look at, say, Adani Ports, its DJSI score puts it in the top 3% in the world on governance. If you look at Adani Transmission, is SBTI 2, fully compliant with 6 principles of TCFD. If you look at Adani Enterprise, its DJSI score out of 135 global companies, it is number 7. See, there is lot that happens strategically. I've spent all my time in the strategic world, in finance. There is a lot of gatekeeping. There is a lot of issues that relate to emergence of a large platform. And we have to deal with the emergence issues and risks, which we will deal with in appropriate manner and fully disclosed manner. But to say that one of the highest rated governance groups in India by independent agencies like Moody's, for example, rates APSEZ top 3% out of 4,800 global companies. Number 1 in transport logistics in all of emerging market in the world. Adani Green Energies ESG score 14.6, which is the highest in the world in its peer group. You are talking of companies that have consistently high ratings.
No, but Robbie, are you therefore telling us that various foreigners have suddenly ganged up against a Swadeshi Made in India group? Is that what you're saying?
No, I'm not saying that. All I'm saying is that when you emerge on a global stage as a large platform, there are growing pains. Now, some of them we have to deal with in a mature way rather than saying MSC have not done this before. Because that I was answering that question, please, with due respect.
Right.
No, I was simply saying that no large global platform also has emerged from India before. In infrastructure, there is no infrastructure platform has emerged from India also before. So people government of India provides infrastructure services to 1.4 billion Indians.
No, Robbie, there are dozens of Indian companies that have accessed the global markets, that have operations globally. Without taking any names, Indian companies do a lot of work all across the globe. But let's move on from that point. And this is
sorry, I would just like to clarify one thing when you say this. Please understand this. Okay, for example, we provide infrastructure services to 400 million people in India. After the government of India, we are the largest platform in infrastructure in the country. Secondly, for example, a lot of Indian companies access global market. I agree with you. But of all Indian companies, you can check with any banker, anybody on the street. The largest 144A issuer out of India is Adani Group. We have the largest global footprint. So naturally, we have the largest interest also. So if people comment on the largest 144A issuer out of India, if people comment and want to ask clarification, that is okay. We will provide clarifications.
Okay, I need clarifications on a couple of points, Robbie, at this stage. And one of them is the questions that are raised on the PE ratio of some of your firms. And when you compare them, and these are analysts who are asking these questions, including in that recent report, when you compare it to other firms, Adani PE ratios are described variously: stratospheric, not justified, very high. What do you have to say about that?
I was asked this question in 2021 also. My answer today is still the same. India is the only large stock market in the world that still does not have utilities index. So when you talk of analysts, there is not analysts who have covered utilities at all in the entire country because we don't have the index only. So that is why the same mistake is made again and again. Infrastructure companies and PE multiples in a matured infra like Europe, like US, you can compare PE multiples for infra companies with other PE multiples because they are mature. They are growing at 2 to 3%. Indian infrastructure today is like technology because India needs infrastructure. So we are growing at 22 to 23%. In fact, Adani Green is growing at 40%. Even our tech companies are not going 40%. So when you grow 40% and you are a capital intensive business, two things happen. First, your growth is very high. Second is you putting capital. So when you put capital, PE is a result of P&L. So when you put high capital and high growth together, what happens? High growth companies will have high PEs. Then because we are in infrastructure, our depreciation is very high. So now your profit artificially get depressed because in infrastructure, depreciation is return of capital. But on the P&L side, it's the negative. So two things happen simultaneously. High growth, high PE. High depreciation lowers your reported accounting profit. Cash profit is still high. So when you say our PE is stratospheric, our cash multiple today is before this volatility, even at a level before this, we were trading at 31 times debt to EBITDA to enterprise value. So now, but growing at 22%. So growth adjusted, we were trading at an average multiple of infra portfolio, similar infra portfolio in the US or in Europe.
Okay.
So what you are saying is correct but PE by result for a fast growing infra companies could even be 1,000 times.
Well, I'm glad you said that. And just on an aside, not specifically on your answer, I've heard this argument from many startups also about valuations, but you are not a startup. This is just a comment made in lightly. Let me now come to another question, and this is your leverage. Consistent questions being asked, not just now, but even earlier, about the amount of debt. And this is a big concern in India because you have public institutions who are investors, big ones, LIC, SBI. Beyond the FPO, which you have told us is set to be fully subscribed and will therefore reduce your debt to that extent, what is the plan to reduce leverage? Do you feel that your current debt levels are sustainable? Because some people also look at your P&L and raise questions on that as well.
I feel like I've gone back to grade 12 in school, but nevertheless, see, two aspects to this. First is the debt level is linked to the rate of return you earn on your asset. We are infra. Every single rupee we borrow is borrowed against an asset. And the amount we borrow is linked to the return you can earn on the asset. So at a portfolio level, for example, we have cash flow of 8 billion a year. Our net debt, that is gross debt minus cash we hold on various balance sheets across our listed portfolio, is just over 26 billion. So our net debt to EBITDA ratio is just 3.1, slightly around that number. Now, just do a simple math. If our average debt repayment, interest and P&A is approximately 10% of 26, 2.6 billion, we are covered 3 times, which means we are at the lower end of global infra platform. Actually, we are in the top quartile. And I'll give you a point on this. You look at a company called PSEG, NextEra, etc., Duke Energy in the US. US is AA plus country. Their utilities are rated BBB or BBB minus. We in Adani Transmission, which is a utility, it is in India, which is BBB minus, 7, like 1, 2, 3, 5, 6, 7, 8 notches below US in rating.
Right.
But Adani Transmission's rating is triple B minus also. So think of this. Our utility business sitting in India has the same rating as the utility business in US. Do you think that credit is an issue? Our credit rating is exactly the same, and you named SBI. That's only our name SBI. We don't like to name. SBI's credit rating and our credit rating is exactly the same.
Okay.
Yeah, Adani Transmission's credit rating and SBI's credit rating is same. Adani Port's credit rating and SBI's credit rating is same. Part of Adani Green's credit rating and SBI's credit rating is same. So we are one of the highest credit rated infrastructure portfolio in the country. Now, debt levels are determined based on, like I said, on cash flow. Therefore, we are high rated. So it's not linked to somebody look at P&L and say, oh, your debt is too high. Look at the cash flow our asset produces, and against that cash, look at the debt we have.
Okay. Just the second part of my question, and I just want to quickly get it out of the way.
Please.
Besides the current fundraise, are there any other steps you are looking to pare down debt, or are you telling us that you are comfortable with the levels of debt that you have and will continue to manage it basis your earnings?
No, we will manage debt based on our targets, which is that our infrastructure companies should have credit ratings consistent with the sovereign credit. And what we are required to do in terms of debt amount, in terms of structure of the debt, to achieve that rating, which is equivalent to the government of India's ratings as a nation, that is how we determine the debt level.
Okay.
That is the highest test we can impose on ourselves.
Okay. My final couple of questions to you. The first one really is linked to the concerns that have been raised in the public domain about public sector funding in the domestic context and large institutions and the loss that they have seen in the market value of their investments, again, LIC, SBI. Will such institutions continue to fund you?
See, when you look at LIC's investment, SBI doesn't invest any equity with us.
Yes.
LIC invests. Now, LIC did not invest. Now, when you say LIC has suffered a loss, LIC value of LIC's holding in Adani Group was
I just said that the market value has gone down. Just to clarify, I'm not saying that they've suffered a loss. That would be...
Yeah. Okay. So market value has gone down because of volatility.
Yes.
But if you look at the return that LIC has made in its capital that invested with us, it is still a multiple. It's a three-bagger.
Okay.
So now investment decision, LIC is a very robust and one of the fundamental financial institutions of India. And they have highly robust, we know them. They have massively robust systems and processes in place.
Okay.
How they design their portfolio, I am pretty much sure they are one of the best in the country. So I don't think that they will put themselves in a situation of risk deliberately for anything.
Okay.
So we believe that they will make decisions based on risk reward, on their portfolio risk reward and their obligation to their policyholders, etc.
Absolutely. And institutions such as LIC are known to do that and should continue to do that. My final question, Robbie, and thank you for taking the time out on this. Do you think after this episode, global fundraising is going to become tougher for you? The global economic environment is already stressed. And along with that, what would you tell retail investors? Because we started this interview by you making it clear that retail participation is not happening really when it comes to the FPO. There are retail investors who are worried. They are asking questions. Who is selling in the market? Your public float is less. The promoters aren't selling. We don't know. Domestic institutions also don't seem to be selling. And your stock is still being dumped. So the global circumstances which seem to have turned adverse with some of these comments, hedge fund activists asking questions, all manner of stuff being said out there on the social media. Is this going to impact your global fundraising and sentiment as far as Indian retail investors are concerned?
See, Indian retail investor, I answer first because we have a particular sadness about the loss they have suffered, and which pains us because we haven't sold anything. Large institutions, as you said, have not sold anything, or we have not suffered anything. It's just paper loss. But retail investor got caught in this, and we are very, very sad. And they got caught in this on a bogus, made up, misrepresented report that got circulated in India, unquestioned by various outlets. Now, that is a problem, and we are really saddened by this. We are sincerely, whatever we need to bring into our risk assessment systems going forward, we'll bring them in, and we are hoping that by doing that, this will go away, and we'll be able to better handle this risk next time, because we always plan for event risk, but we don't know what the event will be, but we'll improve our risk management next time around. In relation to your global fundraising, like I said, we are the highest rated infra platform in the country. We are one of the highest governed companies in infra in the world. Whilst there can be some dilution, some movement short term in this, but we plan for intergenerational investments. This is infra. We invest in capex for 25, 30, 50, 60 years. If you're asking me that in the short term we have to look at how we plan and do things, answer is yes. That's part of risk management. In the longer term, we believe the story of Adani infrastructure, the story of our platform is so powerful. It's such a large rate of return on asset business with such large cash profits that it is a natural magnet for investors who like investing in long infrastructure, properly governed companies. And we have full faith that if we have this conversation in 2032, we will not be talking about this. We'll be talking about what success it has been, because India will succeed and we are in the core of India, and therefore we will succeed with the core of India. We only have to execute and run our businesses properly, which we will do unquestionably at all times.
Robbie, I certainly hope to be around to be able to have similar chats. Jate jate, as they say, one final point. What has Mr. Gautam Adani been telling you through the last few days? If you can share that with our viewers.
See, Mr. Adani is to infrastructure investments what Steve Jobs was to smartphones. So, he has singularly altered the landscape of infrastructure in India and pioneered the development of infrastructure by private sector, even at a global level, in a unique model. Okay. For me, who is facing this, I am able to do this because I know personally that whether it is 2 a.m. at night, 3 a.m. at night, I can reach him, and his only thing will be, what is it that you need me to do? So he supports the whole thing 100%. He is in command fully. And what he tells is, what you need to do, you just tell me what the support is. This is the candid conversation I can share with you.
Well, Robbie, thank you very much for being candid and taking all those questions. And I imagine the questions won't stop. And I'm going to wish you all the luck for what you are doing. And also, thank you once again for taking out the time to speak with us and clarify many of those doubts that have been raised with regard to the Adani Group. Once again, viewers, if you've been, thank you very much for watching. We'll be back with more. Do stay tuned in. Goodbye.
If you like the video, do like, comment, share and subscribe.